Welcome to this talking point where we're going to be discussing the latest trends in property investment and the impact of the recent interest rate increase on property investors. So, property investments has always been an attractive option for investors looking to build long-term wealth. And in recent years, the property market has seen a significant growth. However, with the recent increase in the interest rates, there's also been a shift in the landscape of property investment. So this has raised a couple of questions from property investors, such as how to navigate the changing market, where to find the best opportunities, and what strategies to employ to maximize their returns. So in this interview, we're going to be joined by the General Manager of Destinata Properties, Emile Grobbelaar, who is a seasoned expert in the property sector, and he's going to be sharing his insights and perspectives on this topic. So I hope the discussion will be insightful for all of those who are interested in property investment. And I'm sure we're going to provide some valuable guidance for navigating the current landscape. So firstly, Emile, thank you so much for taking the time and for joining us today.
Hello, Damien. Thank you.
Now, Emile, last week in your article, you indicated that despite the interest rate hike, which is now, at the time of recording this, sitting at 11.25%, that this is still good news for property investors. So why do you feel that the investors could still be sitting in a comfortable position if they were to enter the market at this point, or if they decided to also expand their portfolio?
Damien, we need to look at obviously both parts of a property investment, which is your purchase, your property and the cost that goes with it, i.e. your bond repayments, and then also the rental side of it, where you need to get your income from. It seems like we are at the peak of the interest rate increases, although I do see that the inflation is not really under control yet. So there might be one more increase. But if you're an investor, then you need to buy now. Once the interest rates start dropping, then everybody else gets back into the market. Your competition, purchasing power from other people is there once again. Tenants can afford to buy, so they get back into the market. And then it is not that easy to get really good deals. So right now, there's a lot of stock available. You can negotiate price. You can negotiate it right down to the point where your investment numbers is what you want. So that is why you need to buy now. If you can afford to buy. We also see from the bank side, we get a lot of 100% bonds, even in trust. So that's been since last year already. So those are very good signs. And once again, if you don't have to use your own money to buy, use the banks, but always have your cash kitty available for the shortfall, because obviously the shortfall is higher when you have 100% bond instead of 80% bond. So have that money available. If you look at the rental side of the business, with interest rates going up, the people who bought when it was 7%, they can't afford their properties anymore. They're selling and they're becoming tenants. So those are good, strong tenants that can pay and is willing to pay and look after their accounts. Otherwise, the banks would not have given them bonds in the first place. So those are good quality tenants coming back into the market. And a review that we received with regards to a survey that was done, rental payments basically rates as the second most important account that the tenant is paying, or people out there, consumers are paying. The first obviously being their bond. That's most important. And then it's rental payments or maybe some other loans. But rental payments are very high on the list of priority of accounts to be paid. So you will get strong, good tenants that look after their accounts now as well. And that is the advantage of high interest rates in the market that we are sitting in now.
And then, Emile, there's a saying that goes, the best time to plant a tree was 20 years ago. The second best time is now. Now, if we take that into the property investment market, obviously the best time to invest would have been 20 years ago. But with the market being what it is, do you think it's too late for someone to enter the market and to start an investment portfolio?
No, not at all, Damien. The sooner the better, the earlier the better. I mean, the market will always go up and down. But at this point in time, if you buy when you're at the peak or very close to the peak of the interest rates movement, and things go down, you are sitting in the pound seat. With the interest rates dropping, your repayments drop. In other words, your cost per month lowers, and that increases your cash flow. So if you are buying now and you make provision for a very high expense on the property, you will just be much happier when it goes down. You will have more money in your pocket, or doesn't matter whether it's a positive cash flow or a negative cash flow, you will have more money in your pocket. So if you buy now, those are the advantages. You are prepared for market conditions like this. And later on, when other people have to sell again, when these conditions return in the market, you are prepared, you're used to it, and you will actually buy and grow your portfolio. So yes, get into the market right now. Like you say, yesterday was the only time that's better than today.
Now, Emile, you also work with hundreds of investors throughout South Africa. In your opinion, where is the best place to be buying at the moment if you want to start your investment or property investment portfolio?
Damien, obviously we need to look at the two types of property that we always work with, and those are the refinance type property or high capital growth properties, as well as your provider type property or positive cash flow properties. Western Cape performs the best with regards to capital growth. The areas down here, even second-hand property, capital growth values are very high. The other provinces, unfortunately, very, very low, which means in those provinces, there you can buy properties at very good prices. In other words, provider type properties that will give you cash flow. In Cape Town, you're going to search a long time before you'll find something with a positive cash flow. Maybe something where you buy a house with maybe one or two extra apartments on it might give you a positive cash flow if you buy in Cape Town, obviously in the correct area at the right price. But for capital growth, definitely in the Western Cape, the rental demand is definitely the strongest down here as well, although payment record has shown that Gauteng and Western Cape's tenants are the best payers as well, so on time, as well as full not being in arrears payments. So between those two provinces, rental payments plays a role, and you want to buy there. In Gauteng is where you will find the bargain deals for positive cash flow properties, but you need to make provision for maybe a 1 or 2 month vacancy in a 12-month cycle, or even a 24-month cycle, because it takes about 2 months to place a tenant once the property has gone vacant up in Gauteng.
Now, if you were to describe your ideal property for an investor, what would that property look like?
Definitely the 2-bedroom type property. Townhouses, although they are more expensive than apartments, fair, but they tend to grow much longer, over a longer period in capital value in comparison to your apartments. But any 2-bedroom type property, those type of properties, tenants, the type of tenant that look to live there is either people sharing, young people, each having their own bedroom. If it's got 2 bathrooms, each having their own bathroom as well. Young families, parents plus a child, or sometimes even 2. So those are always in demand. As soon as you go smaller, 1-bedrooms, maybe just a single couple without children can live there, or a single person that doesn't want to share. So that narrows the market. So the best type of property, still the 2-bedroom type, albeit it doesn't matter, townhouse or apartment. Very important in a security complex. Doesn't matter which area in South Africa you are. Security, very important. Everybody wants it, especially if they have children. Children run around outside. They need to be secured as well. So I would say definitely within a security complex, wherever you choose to buy.
Fantastic. And then, Emile, obviously the South African market is always up and down. There's always fluctuations. But as a property investor, besides talking about the rental payments, which we've already discussed today, what are some of the other risks that an investor needs to look out for when they are getting a property that they're going to be renting out to a tenant?
Damien, I think utmost, or first and foremost, I would say people need to realize the risk of property investment. There's always a risk of tenants, either the place being vacant or the tenant being in occupation and not paying, and it takes a long time to get them out, and it's costly to get them out. Those are the standard risks in this business that we want to do with regards to investment property. So those are the risks that you need to, can't eliminate them completely, but you need to lower the risk. So Eviction insurance is what you can use. Costs you a little bit of money, anything from about 180 to 250 Rand per month. The costs are very acceptable at this stage. And those type of companies carry the cost should they ever go to the point of evicting them legally, in other words, going to court. I think the money is absolutely worth it because it can go up to 30, 60,000 Rand if it takes a long time. But first and foremost, if you do the vetting of your tenant properly, that is where you eliminate the risk nearly completely. So use agents that does a proper vetting job. You save a lot of hassles for everybody at the end of the day. And another very important thing is, should something happen and the tenant does not pay and even make agreements to pay, arrangements to pay, and don't stick it, you act immediately. Those are the risks. Either being vacant, that can be eliminated by buying the right type of property in the right area, and then the normal risk of a tenant being a non-payer. Act immediately, do your vetting properly, use the correct rental agent.
Fantastic. Thank you so much, Emile. So that concludes our interview on the trends in property investments and the impacts that the interest rates have had for investors. So for you at home, I hope you found this discussion insightful and gained some valuable knowledge on how to navigate the changes in the landscape within the property market. So if you'd like to find out more about how to become a property investor, where to even start, or looking at the correct structures, then register for our free webinar, which you will find the link in the description below. It's a free webinar. It'll show you exactly how you can become an investor and start your investment journey. And then along the way, you'll meet people like Emile who will help you finding the right properties, the right time, and the right places. Now, as always, please like, share, and comment on this video, and subscribe to our channel and stay up to date if you have not already done so. And we will keep sharing wonderful insights from our industry experts. Thank you so much for watching, and we look forward to seeing you again soon. Until next time, bye-bye.